Welcome to the Wisdom Lifestyle Money Show. I'm your host, Scott Dillingham. The show is designed to help Canadians invest better in Canada and the United States. We specialize in mortgage financing and education in both countries. Discover how you can become a better investor and access the financing you need. Welcome back to the Wisdom Lifestyle Money Show. I'm your host, Scott Dillingham. Today, we have our next installment of the commercial investing topics that we told you we're going to go over, and I'm really excited about today's. I have Jennifer Champion and Christine Traynor on with us, and we are going to talk about value add for multifamily apartment buildings and strategies, and how this is a game-changing topic. So I'll turn it over to you, Jennifer and Christine. So welcome.
Thanks, Scott.
Yeah, you're
Okay,
welcome.
so one thing that I really want to touch on, I think that when people go into multifamily, they focus a lot on cash flow. And yes, cash flow is great, but you are also taxed on cash flow. So today we just really want to talk about forcing appreciation and how you can do that in the multifamily space. So one of the best ways to do that is to be raising rents to market rents. Very different than in the single family space. When you are raising your income and lowering your expenses in multifamily, it's all very controllable and you can really predict like what that refinance is going to look like. Whereas in single family, it's really based on your comparables and the houses around you. So a really straightforward example is, say you buy a apartment building for $1.5 million. You put $200,000 into renovations, and then you stabilize all the rents in your building to market rents. And your property is now worth $2.1 million. So you go to refinance that property at just 75% loan to value, and your new loan is worth $1.57 million. So with this strategy, you have taken out your original capital and created equity in the property. Of course, we can get into other products like CMHC Standard and MLI Select, which allows you to do higher loan to values. But right there, you've turned your building. You now own it essentially with $0 out of your pocket, and the returns are infinite.
That's awesome. I love it. So could you explain, because for the investor who's thinking of this, they might just want to apply and think that they can get renovations and it's all good to go. But there's different steps there. What are the two different types of loans? Because we need two loans for this type of product, ideally. So could you explain what those are for an investor who's listening?
Yeah, so depending on, the strength of the numbers on purchase, you can use a credit union and go 75% loan to value. You know, Definitely a better strategy is to do what we call a bridge loan. So they're interest only payments, and then that you're using those interest only payments to keep your costs down while you're stabilizing the building. And then we call it, once you go to refinance, it's basically called takeout financing. So this is like your long-term financing, 5-year term, either conventional or CMHC, to access the equity that you've created in that building.
Exactly. Yeah. So Jennifer nailed it, guys. There. So there is the two mortgages. So keep that in mind, right? Because when you're running your profits, you have to calculate like the fees, the closing costs, all that stuff, and that's going to happen twice. So great strategy. And I know Jennifer and Christine, right? Both of you are actively investing in this strategy. So I really like that. Not only are you talking about it today, but it's literally what you're doing. So I think that's super important. So what we're going to do, for anybody who's listening to this that wants more information or love this idea and wants to move forward with it, we're going to have Jen and Christine's Calendly links into the description there, so you can book a call with them and discuss the strategy for your next investment. Did you guys have anything else to add to this strategy, or anything else that we should know about?
The only thing I was going to add, Scott, is that it's also a piece of it is looking at specific markets where this strategy works really well. So typically that's like where we're seeing a lot of people doing the strategy is landlord friendly markets like Alberta, where you can go in and increase those rents. It is a little bit more challenging in other markets where you have a little bit more, rent control and that kind of thing. And it's also a great strategy that we're seeing people use in the US as well.
Awesome. Love it. Yeah. Thanks for sharing. So appreciate it, guys. I'm definitely looking forward to next week's topic. I know it's going to be an exciting one, and we can't wait to share it with everybody here. So thanks so much for joining us.
Thanks, Scott.
Welcome to the Wisdom Lifestyle Money Show. I'm your host, Scott Dillingham. The show is designed to help Canadians invest better in Canada and the United States. We specialize in mortgage financing and education in both countries. Discover how you can become a better investor and access the financing you need.